Joining me now is Thami Netha from Shiloh Capital to give us his take on the day's markets action. Thami, thanks so much for your time this afternoon. And let's start by getting your analysis of trade this week. The potential fallout from the U.S. government, really what's been making headlines, despite the impact the shutdown has on economic releases. Markets seem to be charging ahead.
Yes, this has happened before during the Obama administration. So I think there's some, call it institutional memory around how to manage government shutdowns. Typically, they are the tool used by the opposition to sort of get their way with the current, or call it the Republican government. So I think there's going to be some back and forth, but eventually Put America First is going to come out and they're going to arrive at some kind of solution.
With that shutdown in place, has this shifted your expectations when it comes to the Fed's easing cycle, as we won't be privy to those U.S. non-farm payrolls for September? I don't know, there's been, different opinions around the ADP figures. Some say that it'll provide the Fed with enough information. Others saying that those ADP numbers are very volatile month to month and one can't make decisions on the back of that.
No, so my view is that nothing will change as much as we think. I think this is all a red herring. I think the war between the Fed and the presidency is the real issue. Once that is sort of worked out, I think then we'll have a more sustainable monetary policy that we can project and see into the future. At this point, really, it's a political battle that's impacting the economics, but that can evolve more and more as political solutions are found. I think any sort of Trump administration initiatives will always find some kind of opposition in the broad sense. And once those issues are resolved, because at the end of the day, government must work. So once those issues are resolved, then we'll see, I think, a more stable Fed. I think at this point, it's really going to come down to who blinks first. And my view, or our view, is that the president will blink before the Fed does.
So with that being said, you are pricing in more Fed cuts?
Yes, pretty much. At the very least, there will be a stability. So they will not cut, or and leave it steady, or they will cut. They definitely won't raise.
Okay. Let's move over to what's been playing out here at home. Local markets really strong this week, with the all share smashing past a record high earlier in the week on the back of the higher gold price as well as higher platinum prices. Year to date, the all share is up, I think, almost 30%. Just your analysis of what we've been seeing playing out in the JSE, where we've had, yes, those miners really boosting the bourse as a whole, but the SA Inc. stocks under pressure.
Yeah, so I think it's a reflection of the call it the portfolio management of the stock exchange, that a large part of it is weighted towards commodities, as it makes sense, as that is a large portion of our economy. I think we will always be susceptible to commodity price movements. I think what we need to really focus on now is on the manufacturing and production side, and then that coupled with the retail side as well. I think once you have those two pillars sort of more focused, then I think SA Inc. and at large will move the right direction. I think once you're talking largely about commodities, it becomes about profitability because of the pricing of the commodities and the global demand for them as well, given a lot of what's happening around trade. I think they will continue to always drive value in the exchange. However, we have to really look at retail and manufacturing or industrial. And when those begin to pick up more significantly, then there's a view of actual economic activity.
And just on those commodity players, platinum in particular, we saw Implats saying it's about to enter a more cash generative phase as it benefits from those higher metal prices, of course, and its cost-cutting initiatives. Have you been seeing value there, particularly Implats? And just reflecting on the last results we saw, CEO Nico Muller was cautiously optimistic about the current economic environment, particularly when it comes to those metal prices as well.
Yeah, so we've got to remember that miners are price takers. they don't get to determine the price they sell their commodity at. So what they can really focus on is operational efficiency and costs. So when a CEO is making great efforts to manage costs, it's always a good sign. Now, is the entry price right? We'll yet to see. We have to match with how we view prices going forward, and that will determine the value, if there is any. However, I think it's always a good sign when a management team is controlling the controllables, and they're really focusing on those and allowing the stuff that they can't control to be outside of their scope. So it's good price, but great operational efficiency, cost management, that generally leads to a good outcome for a miner.
All right, before I let you go, let's get your stock pick. Where are you seeing opportunity at the moment?
Stock in Canada called Metalla Royalty. It's a precious metals business. Their assets are high quality, strong growth pipeline, but they've got a deep discount to intrinsic value. So we believe that given the asset price movements, commodity price movements positively, that there will be a lot of value to be gained in that stock.
All right, let's leave it there. Thami, thanks so much for your time and taking us through trade at midday. Now that was Thami Netha from Shiloh Capital.